Hello and welcome. My name is Sergio Marrero, and tonight on RBL1 Live, we have Carmen Palafox. She is a partner at MiLA Capital, a venture capital fund that focuses on hardware. So I'm excited, and she's based in LA, so excited to have you. Thank you, Carmen, for joining us today.
Thank you for having me. Excited to be here with you.
Yeah, absolutely. So before Carmen jumps in, she's a graduate from Haas Business School with her MBA. She's a member of the board of Pledge LA, also on the board of the National Venture Capital Association. So excited to dive into all those pieces tonight and also hear about your journey. So without further ado, could you share a little bit more about MiLA Capital?
Yeah, MiLA Capital started in 2015, and it was born first as an accelerator program, similar to 500 Startups or Y Combinator. Our goal, I have two business partners, and our vision and goal was to put LA on the map for hardware tech. We saw this massive gap in supporting founders at the pre-seed stage in hardware tech. And we saw a big opportunity based on all of the resources in Los Angeles around manufacturing and supply chain. So the fund evolved over time to also invest in companies that were a little beyond the accelerator stage. And so the Fund One is a combination of pre-seed and seed stage tech you can touch.
I love it. Tech you can touch.
Tech you can touch.
I know you have 18 portfolio companies. Can you talk about, what types of companies do you ideally invest in now? Like what size checks, what industries? When you say tech you can touch, what does that mean?
Yeah, Fund One actually now has 22 investments, or up to 22, and it's pretty broad ranging. We've invested in everything from B2B to B2C, from sports tech to space rockets. It really is expansive in terms of what we've invested in. We've developed connections and networks in a few key sectors that really get us excited. Food and ag tech, for example, climate tech, health and wellness, automation, and mobility aerospace.
So what made you focus on hardware in particular? I know, being also like on the investor side now, but the founder side, hardware is hard, right? We talk about the longer iteration cycles, the capital that it takes. What made you choose hardware?
Well, I think a few reasons. LA has deep expertise in manufacturing. LA employs 500,000 people in manufacturing. So there's a lot of knowledge base here. When you think about companies like JPL, NASA, Boeing, we get pitches from folks that are embedded in those companies. There's 12,500 manufacturers in Los Angeles. So there's a rich history of manufacturing here, and that's one of the reasons we saw a big opportunity to help founders that were trying to get off the ground in that space.
That's great. Can you share a little bit more? I mean, that makes sense, especially I know when I worked in consulting, went out to the LA area and all the aerospace and defense manufacturers. So that does make it holds true for the thesis and being born and rooted in LA.
Right.
Can you walk us through the journey of how you moved to start your own fund?
Yeah, my background's in finance. So I'm a Southern California native, born and raised in San Diego, moved up to LA to go to USC, and fell in love with LA just because it's so diverse and there's a lot of richness here. I wanted to stay. Got my first job in finance at a firm called DFA, Dimensional Fund Advisors. And if you know anything about finance, it's at the complete opposite end of the spectrum of where I'm at now. So, they produce mutual funds that are based on very rigorous academic models. They have ties to University of Chicago. And so it was an exciting time for me to start my career, really start understanding capital markets and the different types of investors, asset classes. And I was there for 15 years working in investment operations, launching funds globally, and I was really fortunate and lucky to get my start there. I left and went to UC Berkeley to pursue a different path, and was quickly immersed in the tech ecosystem. So first month, we did a Silicon Valley immersion. I had no idea what venture was really, but quickly had my eyes opened. I got to meet a lot of venture investors, startup founders, and quickly realized that a lot of in my view, the wealth creation was moving from the public markets over into the private markets. And that's where I wanted to shift my career.
That's great. And especially the shift in really 15 years focused on mutual funds. What felt, what did you feel helped you with that transition?
I think, I'm interested as an investor in making money and building wealth and generating returns. And so to me, it was pretty obvious that it was getting harder for companies to go public, and that a lot of the wealth creation was going to happen in the private markets. And I also saw that, tech was starting to enable an interesting future in different ways. And I wanted to be a part of that growth.
Great. I think we also had a question come in that said, how did you transition to becoming a risk taker to a degree in attempting to invest in early stage ventures? It also feels, it's interesting because I know you started in the accelerator model, and the accelerator model is like the riskiest group of the risky, right? It's like the embryonic stage versus the mutual funds, so it's really fascinating. As well, what helped you, in terms of what is it, making that transition? Anything in particular inspire that?
I think it's a interesting question because the risks that investors take are very calculated. I would say you're betting on, for example, a mega trend or a global trend or a competitive advantage. And so the risks you take are, in my view, pretty well thought out. And as investors, you want to think about the value you can add to the founders, to the company, and make sure that you can get them to that next stage. And so it was an interesting transition, but in my view, I also saw the big opportunity, especially in pre-seed and seed, when you're potentially one of the first investors into the company.
And when and what were some of the challenges in first, you talked about fund 1, fund 2. Can you share a little bit of color of like, how big were those funds, and like how, how did you think about like starting out when you first got started? Some of the people watching are angel investors, aspiring, fund managers. Can you share a little light around like some of the challenges you faced and how you overcame them?
Yeah, I mean, it's definitely competitive to raise a fund. I think there's over 1,000 micro VC funds. And so understanding what your value proposition is to founders is critically important. I was really lucky. I got a lot of advice from venture capitalists that had started funds, and their advice was really to go heads down and figure out what our value proposition was going to be to founders. So what service were we going to add to them? How were we going to help them get to that next level? Why were they going to choose us? And to focus on that versus going out to raise money. So thinking through that, I mean, I think raising your own fund it's so multi-dimensional, because you have to, in addition to thinking about sourcing, you're also thinking about the administrative part, the regulatory aspect, making sure you're paying your taxes, like all of that good stuff. So there's always a lot going on.
And how did you think about, as you move forward, you mentioned you have business partners with you. How did you think about building that team to make MiLA run?
Yeah, it was both opportunistic in terms of timing. We were all looking to start a fund at the same time, and we had complementary skills. So my background is in finance. Nora May's background is in mechanical systems engineering, and Sean's background is in contract manufacturing. So I would say that we all had complementary backgrounds to be able to assist our founders, but also to be able to create value for our LPs.
Got it. And how did you meet them?
Yeah, interesting story. I met Nora May through a mutual friend that's based in the Bay Area, and I had taken a leap of faith leaving Dimensional, which was a very awesome company, tier 1 in finance, and taking the leap to do something different. And Nora May was contemplating doing the same thing. And so a friend of ours put us together and said, I think you should meet, and I think you'd inspire each other. And we had brunch. This was right before she was thinking about leaving Boeing. And a few months later, I got an email from her, and she said that she took that leap. And a few months after that, I joined the team.
That's great. That's great.
Yeah.
It's like the magic moments.
Yeah, the unexpected. Sometimes things come to you.
That's great. That's great. No, that's a good. And taking a step back and looking at your portfolio companies, can you talk a little bit more about how what's different about helping hardware portfolio companies grow? What are you guys doing differently on the sourcing end, but also in supporting those ventures?
I think there's interesting challenges that hardware entrepreneurs face and think about as they go through the technical aspect of what they're doing versus go to market, and when's the right time and what's the right balance. So, I think that 3D printing, for example, has really created a level playing field for hardware entrepreneurs. We've had several of our portfolio founders actually get into pilots with 3D printed devices versus having to spend a ton of money on tooling. And so that's enabled them to look a lot more like a software company, for example, where they can go 3D print something, give it to the customer, get feedback, iterate before they spend a ton of money on manufacturing. So we've been able to help founders think through manufacturing, supply chain, What types of components are they going to use in their product? Can they use off the shelf? Do they have to custom make some components? Third-party logistics. I mean, it really goes on and on. And so for us, it was all about creating this knowledge base, both of technical resources, human capital, and also hardware, like, you know, machines that they'd have access to as well to save on cost and resources.
Got it. And for one of the questions that we just got is around how do you think about like ROI in software compared to hardware? Do you think that there are you know, how are you maintaining the same level of competitiveness, especially with in venture? We're looking for those, you know, 10x plus type returns. So is part of the what's part of the strategy to get that in the hardware space?
Yeah, I think it's understanding what the value add is. So for example, we just invested in a company called Nora Water Technologies, and they're creating a hardware software platform that enables the remote monitoring of water membranes in the reverse osmosis space. And so without the hardware, what you'd have to do is indirectly monitor the health of the membranes. And so I think hardware is often the Trojan horse. You can come in and create more efficiencies to your product, and then still have the reoccurring revenue through a software platform. We have a lot of companies that are both hardware, software.
Got it. I hear the term that I've heard pitched by founders is we're a software, a hardware enabled software company, which I'm like, man, that's a beautiful way to pitch a hardware company. But
right.
no, I get it.
Yeah, no, we tell companies you're not a hardware company. You're actually like an energy company or a food tech company. And so I think that the hardware is actually an enabler.
Yeah, absolutely. Can you? I want to take a shift, especially with all that's going on right now in LA. One of the biggest, protests around racism and equality, systemic, and calling for systemic change. How has that impacted you and MiLA?
Yeah, I think, one of the reasons I love LA is because of its diversity. There's 210 languages spoken here. There's so many different cultures here. It's truly a melting pot. Last week was a bit unsettling, pretty scary at the beginning. I live in West Los Angeles, so very close to where a lot of the action was happening. But I think that the situation is a bit different now. We're seeing a lot of the peaceful protests really elevated and spotlighted, and that's resulting in positive change. So I'm pretty optimistic for what the future could look like. I think we have to be courageous and bold during this time, and make sure that we fully understand that the future is here and now. I think, when you think about demographic shifts, I remember the first time where I was called a person of color versus a minority. And that was interesting to me, interesting transition to go through, because in certain states, minorities are the majority now, and we really have to focus on building an inclusive future if we want to remain competitive in the innovation space and truly across all industries.
And how are you seeing? I know you mentioned you, Nora May. I know both of you. You know, Latin part of Latinx VC. And how does this? You know, how do you see this impacting venture capital? Like this, you know, this call to action, and we see things better. But you know, like how do you see it? How have you seen it impact, and what do we need to do?
Um, well, it's going to come from the top. So it's going to come from limited partners prioritizing diversity, equity, and inclusion. There's so many data studies. There's so many reports showing that diversity hits the bottom line. And so by not paying attention to those studies and not paying attention to those reports, we're actually investing irrationally versus rationally. And so my expectation is that diversity will start to be prioritized. I see, you know, there's massive gaps. Only less than 4% of assets under management are managed by what we call minority firms. And so that's a huge discrepancy relative to what the demographics of our country look like.
And what are some of the things that you said? It you know, it comes from the LPs. I know from and as you know, being what is it, a fund manager that is pitching to LPs, they don't exactly make it easy to be found or engage in extensive conversations about where they should allocate their capital. You know, what are things that we can do to really move them and make that happen?
Yeah, I think, you know, that's a tough question to answer, but I did last year have a sit down with a LP, and he was like, you know, your diversity is your differentiation, and that really struck me. You know, we don't have at MiLA, we don't have a mandate to be diverse in terms of the companies we invest in. Yet when you look at our diversity statistics, the companies we've invested in are led by diverse founders. So 32% are led by female CEOs. 58% of the founders are immigrant founders. 42% have a female founder on the team. And 47% are underrepresented. And so I think there's a lot of truth to what that investor told me. But you know, I think I think in general, raising a fund is incredibly hard because it's extremely competitive. You know, I'm in LA, so it's like, you know, getting a role in a blockbuster movie. That's my analogy.
I love it. I love it. And especially that I think not a lot of people think about exactly what you just said is the life experience of growing up, and while you know, you may be underrepresented, right? Is an asset, right? It's an asset the same way as having 15 years experience in finance is an asset. You know, as having a technical background as an asset, it's something that gives you a lens to potentially find great deals. So
absolutely. And you know, I would say that, you know, when an entrepreneur has an accent, for example, to me that's, you know, something that my mom has an accent, so I can totally relate to that. That resonates with me. It's, you know, it is the lived experiences that that influence kind of how we lead, how we invest. And so I think having that diversity baked in is pretty important.
that's great. Can you share a little bit more about the National Venture Capital Association? I know you just joined the board. Can you share a little bit more about what they do and potentially what they're doing to cause change in this space?
Yeah, you know, when I first got into venture, I immediately signed MiLA up as a member of the NBCA. It's an association that really focuses on policy and regulation, something I'm really interested in, and they are the voice of the venture community in DC at the federal level, always looking at the impact regulation can have on the venture community, both on VC firms and on startups. So they did a lot of work just recently on PPP and making sure that a lot of startups, especially very, very early stage startups, would be eligible for the loan facility programs. They've done a lot on the immigration front as well. So making sure that we can keep a lot of our immigrant founders and talent here, and that they have a pathway to be able to build their startups. And so I'm excited to join the board for a 4-year term, especially during this time in our history when I think that innovation will be critical in so many different sectors like climate, education, healthcare. So I'm looking forward to working hard.
Well, yeah, congratulations on that, and excited to see what comes next. Can you share? I know you're a member of Pledge LA. Can you share more about what is Pledge LA and why you signed up?
Yeah, Pledge LA is a collaboration between the Annenberg Foundation and the mayor's office. And the mission is to build an inclusive tech ecosystem, both on the founder side and also on the venture side. So, I think that that the organization and taking the pledge means that you're committed to inclusion. We have some signature events. I'm on the Diversity, Equity, Inclusion subcommittee, and so we've put out an internship program. This is the second year. We had, I think, 400 applicants this last cycle, undergrads and graduate students from just with exceptional backgrounds looking to understand and be able to have some experience in venture capital. And so our Pledge LA intern is going to start this month. There's also mentorship programs. We basically are trying to create a pathway for the communities, different communities to understand each other and to build that inclusive culture from the start. I think it gets harder as companies grow bigger to be diverse if they're not. And so getting to them at an early stage is critical.
Absolutely. No, that's great. How do you think about, I know there's a number of programs, so HBCU, VC,
Yeah.
You mentioned what Pledge LA is doing, teaching people.
And they're partners, by the way, in
Awesome. Great.
the internship. Yeah.
Great. And so this is undergrads, right?
Undergrad and grad students.
Okay, great. So
Yeah.
in doing that, what are your thoughts on there? You mentioned how tough it is to get LP dollars and the number of microfunds and training more people to get into venture. What's the, what are your thoughts on just the capacity of the industry? Like, how many funds can we have or do you think it's, you train more people and, we should have more funds? What are your thoughts around that?
Yeah, I think there are many problems that can be addressed through technology, especially in certain sectors, like education. I think until we reach some sort of level playing field where everyone has the same access to the same level of education, to the same level of healthcare, when we address climate change, that there's always going to be room for more voices. And as long as you have a solid value proposition, that you have a durable model, good teams that are investing based on their ethics and values, that you have a shot.
Awesome. Can you share, we had a question come in on talking about, as an investor investing in the hardware space, and you're on your second fund. Can you talk about what, what's something that you did in terms of a deal that I guess you learned the hard way and helped you become better in fund two?
Some lessons learned, I guess, in the hardware space. It's a very long journey. So, we've had companies, obviously, that have closed shop. And I think, when you first experience that as an investor, it's a incredibly hard, especially the first ones. You do go through that process of, could I have done something differently to ensure survival? But at the end of the day, as an investor, you're both a coach and an advisor, and your input is sometimes going to be taken and sometimes not. You do your best to help founders get through different challenges, but you never know what the market's going to do. I mean, right now, you're seeing that we're experiencing just a bunch of different externalities. And so we've been incredibly lucky through this health crisis to not lose any companies. But if we were in different sectors, I mean, the game could totally be different right now. And so I think investing at the very earliest stage, my advice for people who are thinking about the industry is that you have to be comfortable with uncertainty and a lot of chaos.
Awesome. That's and if you taking a step back, can you talk a little bit about how that affected your strategy from fund one to fund two? You mentioned it briefly that you invest in early stage companies, and now you're focused a little bit on support, like more on supporting growth. Like how did that change in terms of number of investments and dollars and how much you guys raised?
Yeah, I think there's a few things there, and it's like really understanding, getting better to know, building more awareness about your own capabilities, your own network, the strengths of the region, how you can support companies. So that played a lot into kind of the direction we wanted to take going forward, and where we thought we could add value. For us, it was looking back at how much more capital we could have invested. Our first fund was a proof of concept fund. And so going into fund two, thinking about, wow, we could have invested more, taken more ownership, and also thinking about like the pace of your investments, like how many realistically can you do in a year, based on how much time you have to source deals, evaluate them, and support the founders to get to the next level. So all of that played a big role in how we thought about both portfolio construction and portfolio strategy.
And now, and in the time of, we are in a global pandemic, and you said dealing with the stressors, that's amazing that no companies the companies are strong and bearing through. What are some things that you all are doing to best support your portfolio companies?
Yeah, I think the biggest issue at the start of this was the tremendous amount of uncertainty. Like everyone was distracted. There were so many unknowns. I think now some of those uncertainties have been addressed. So our companies are starting to understand when their customers are going to come back to some sort of buying pattern. And so that has resolved a lot of issues. I would say that, best case is that companies are about a quarter behind in where they thought their revenue projections would be, but at least they can now plan for that. We had a lot of companies that, I think founders are really resilient, and so it, shifted direction to, let me build internal capacity and capabilities, so when those orders do come, I'll be ready to scale faster. Internal processes, things like that. So I think that in terms of what our companies are doing, a lot of them have been in essential businesses, so it hasn't slowed them down too much. And all of that has been eye-opening to me as an investor as well.
That's great. Especially during this time. What is there any particular company you'd be willing to share the story of resiliency that you thought was pretty inspiring, like that shift in focus?
Yeah, I think that, so just, I would say that I've seen resiliency across a lot of them. A lot of them have actually went back to their customers to talk to them about what their future plans were. And we have one company that was very supportive of the founder and said that they would, help their team out with resources. They were working out of a university facility, and so the university had to shut down, and their customer took them in. So, having that close connection to your customers and that trusted relationship, I think, is important. And establishing that, we had a direct to consumer company that shifted focus in, they knew they couldn't sell their product at that point, so they turned their strategy to creating more community. And I think that was an absolute smart move. We had a company whose client base was in Africa. So their supply chain was really interesting, where, they had a lot of raw materials coming from China, where the pandemic kind of was strongest at first. And so their strategy was to really push on pre-orders, letting their customers know that there might be a delay. So a lot of interesting strategies by our founders to really get through this period.
Yeah, those are great examples. The shift, I've seen so many shifts from, the in-person, the shift to digital, the, pre-orders and getting closer to your customers and building that trust. I mean, especially moving in with a customer and them taking you in, that's an ode of faith, for sure. So, thank you for sharing that.
Yeah.
I want to bring it back to, the one of the big challenges at hand, and we talk about supporting founders of color and particularly the Black community. What can we do going forward to better support, African American fund managers, fund managers of color, and also our founders of color?
Yeah, I think so the gaps are huge. I've been a part of many organizations that really want to push the needle. I've presented to the Women's Caucus in Sacramento, and I think we need just some massive incentives to really move the needle. I think there's examples of what has worked in the past. So if you look at or think about opportunity zone funds, where that's resulted in a lot of capital going into underserved areas. Economic real estate primarily is where it ended up, but that type of regulation unlocked trillions of dollars into those communities. So, you know, one idea is potentially just adding another option. So instead of investing in these economic zones, perhaps investing in women and people of color led funds. And I think that would really move the needle in a significant way. Otherwise, we're just going to inch along, and the change won't happen fast enough to meet the demographic shift that's already here.
Love that. That's a perfect close, I would say. So thank you very much for joining us, Carmen. So again, for everyone watching, this is RBL1 Live. This was Carmen Palafox, partner at MiLA Capital.